two things in your mind right now. How much are the NASDAQ giants down because of the macro and/or fear of the macro? And how much are they down due to their own fundamental challenge? And in the case of Meta, it's both. And it's no surprise that this stock has rallied recently with the group, but it's no surprise that it is still one of the furthest away from its highs in an environment where a lot of other technology companies have come a long way back. And tonight is going to be one of those nights where we find out whether or not Mark Zuckerberg cares what his stock price is and what Wall Street is saying. My guess, and I have no position in Meta currently, my guess is that he's going to be conciliatory toward the voices urging him to lower the spend. It's not the right macro environment for the way at which he's been pursuing the fever dream that is the metaverse. And if he gets that message and they indicate it in any way, it probably takes a little bit of the weight off of the stock.
So the results are out. Julia Borson's going through it. The stock is up, as you see, near 4% here, a little bit more. And I better stop talking about the gain in the stock because it seems to be increasing. The minute I say a percentage gain, it just continues to go higher, as you see, by some 6.5%. So we're going to go through that. I want you, as we wait for Julia to come on and give us the results, Chris Ferrone of Stratega says, we can't help compare the sharp rallies in names like Meta or Baba to their distant cousins from the 2001-2002 period. Cisco and Nokia doubled off their 2001 lows before distributing again and being relegated back to a long period of relative performance purgatory. The implication, look at that. I mean, Meta's up almost 10%. So clearly, I guess some of the biggest concerns out there did not come to fruition here. But the idea of not to believe the hype so much, these stocks are going to end up going back. It's just a matter of when.
So I think in the case of Meta, you have to then make the case that the deterioration in their business, we have not seen the worst, or the worst is yet to come. And I suppose that you can, but at a certain point, if you're calling something a bear market rally, you have to decide how much of the loss does it have to retrace before you are forced to abandon that position. In the case of this stock, I don't think that you have to do that quite yet. Things can change very quickly. They may get on the call later today and talk about the future in ways that markets right now, just reading the statement, aren't anticipating. So no, I don't think anybody wants to declare victory here on either side. But if you're long the stock into the print right now, at least you have an option.
I mean, the stock was up 24% into the print.
Yeah.
And here we pop on another 12, 13% or so as we go through it. I know I have a beat on the top line, on the revenue number. We have to get the adjusted EPS as well. But this does nothing to upset this story that began, beginning of the year, led to a good January as we roll over into a new month.
Well, no, of course not. And, I don't think anyone, even the bulls, were looking for record growth for any of these important index names. I think what they've done so far, and I know we have big ones still to come, is good enough to look at the rally in the NASDAQ and just say, yeah, this is somewhat fundamentally driven, in that maybe we were pricing in worst case scenarios last October that so far haven't played out.
So Julia,
I think you got that.
Julia Borson's ready to rock and roll here. Is that what we see? We've got a beat on the top line, Julia. I also see DAUs look to have exceeded expectations as well. What do you see?
That's right. A beat on the top line. The earnings number is not comparable, and daily active users better than expected. Just to go through the numbers here, revenues coming in at $32.17 billion versus estimates of $31.53 billion. What's essential here is revenue declined by about 4% from the year-ago quarter. Analysts expected revenue to decline by about 6.5%, so better revenue performance than anticipated. The daily active user numbers hitting 2 billion versus 1.99 billion estimated. So better than expected daily active user growth. Of course, in light of competition from TikTok, that was an area in focus. The company also announcing restructuring charges. So this is not a surprise considering the fact that the company did do layoffs in the quarter. So they're taking a $4.2 billion restructuring charge that's related to facilities consolidation, the layoffs, and also what they call a pivot towards a next generation data center design. They're talking about doing a data center that is going to have a better construction plan to support AI and non-AI workloads. Of course, interesting in light of the ongoing conversation about artificial